Welcome to the Deep Dive, where we cut through the noise and get right to the heart of things. Today, we're plunging into TransMedics' second quarter 2025 results. This is a company really shaking things up in organ transplantation and their latest update. Well, gave us a lot to talk about.
It certainly did. TransMedics delivered a quarter that, really resonated. Strong performance, ambitious plans, definitely worth digging into.
Okay, let's jump right in. Those headline numbers for Q2 2025 were, frankly, remarkable. GAAP earnings per share, the EPS, landed at 92 cents.
Yeah, which just blew past what analysts were expecting. They were thinking 45 cents.
That's a 104% beat. Huge.
Absolutely huge. It really points to, very efficient operations. They've got a good handle on costs.
And it wasn't just the bottom line. Revenue climbed to $157.4 million.
Mm-hmm. Again, well above the estimate, which was around $146.7 million. So over 7% beat there.
And that's a, 38% increase compared to last year?
Exactly. 38% year-over-year growth. Really robust.
Gross margin looks solid, too, consistent at 61.4%.
Right, holding steady. And operating income, about $36.6 million.
Which gives them a pretty healthy 23% operating margin.
Definitely healthy. And they beefed up their cash positions significantly. Ended the quarter with over $400 million.
Wow, that's up $90 million just from the previous quarter.
Yeah. It shows they're not just growing, they're expanding profitably, throwing off cash. That gives them a lot of flexibility, to fund their plans.
It's a very clean picture. You can see why the market reacted positively.
For sure. Strong conviction building there.
Okay, so let's get into the nitty-gritty. What's driving this performance? What's the story behind these numbers?
Well, what's really interesting is how they talk about it. They credit the success to what they call the TransMedics Trident.
The Trident, okay.
Yeah, it's this integrated framework. It combines their organ care system, the OCS technology.
Right, the core tech.
Exactly. Then there's their National Organ Preservation Service model, the NOP.
The service layer.
Mm. And finally, their own dedicated transplant logistics network. It's not just three things, it's how they work together.
So the synergy is the key differentiator.
That's what they're emphasizing. The OCS data feeds into the NOP service, which helps optimize the logistics. It creates this feedback loop, this sort of, competitive moat, hard for others to replicate piece by piece.
And that integrated approach, that Trident, is clearly boosting U.S. revenue. You said $152 million in U.S. transplant revenue?
Yep, $152 million, up 40% year over year. Pretty staggering.
Which organs are the biggest drivers there?
Liver's leading the way, $116 million, then heart at $32 million, and lung contributing $4 million.
And the logistics side, that seems crucial too.
Oh, absolutely critical, not just support. Service revenue overall was up 44% year over year.
Wow.
And logistics revenue specifically jumped 56%.
56%.
Yeah. And that's heavily supported by their aviation fleet. They've got 21 aircraft now.
21?
Yep. And in Q2, those planes covered, I think it was 79% of the NOP missions that needed air transport.
That's serious infrastructure.
It is. And they're looking to make it even more efficient, possibly double shifting some of those aircraft. Think of it like a vertically integrated pipeline for organs.
Incredible efficiency.
You're right.
But, okay, they're not just sitting back. What's coming next? What's in the innovation pipeline that looks like a potential game changer?
Right. This is where it gets really exciting for the future. Around the earnings call time, they got conditional FDA IDE approval, that's investigational device exemption for their Next-Gen OCS Lung program.
Okay, Next-Gen Lung.
And then just days later, conditional IDE approval for a two-part program called ENHANCE for the Next-Gen OCS Heart.
Two big approvals back to back.
Exactly. And the lung trial is particularly ambitious. They're aiming for it to be the largest randomized controlled trial ever in lung preservation.
Comparing it to what?
Comparing their next-gen system directly against the old way, traditional cold static storage, basically, organs on ice.
Which has limitations, right?
Big limitations, things like edema, limited time. They're trying to overcome those historical issues. They're targeting, over 450 donor lungs for the study.
That's a huge sample size.
It is, and it signals they're not just aiming for an alternative. They want to fundamentally change the standard of care. That could massively expand who can get a transplant. Both programs aiming to launch before year-end, too.
So these next-gen platforms could really redefine things. What about beyond the hardware? Any digital upgrades?
Yes, definitely. They rolled out something called NOP ACCESS. It's basically an expanded version of their NOP Connect platform.
Okay, and what does that do?
It's designed to boost transparency for everyone involved in the U.S. NOP transplant process. Real-time data, better connectivity. Apparently, the early feedback has been off the chart.
Makes sense in such a complex, time-sensitive field.
Totally.
So with all this momentum, this innovation, what are their long-term goals looking like now, still aiming high?
Oh, yeah, sky high. They've set a target of 10,000 U.S. NOP transplants a year by 2028.
10,000, that's a big number.
It is, and they're even projecting potentially over 20,000 annual U.S. transplants down the line if they add an OCS kidney platform.
Wow, kidney would be huge.
Enormous. Plus, they're actively looking at international expansion, especially Europe. That's like, what, 45% of the global market? Could nearly double their potential reach.
So their spending reflects that capital allocation.
Absolutely. They're investing heavily, looking for a new global HQ, pouring money into R&D for Gen 3 platforms, expanding their clinical teams, their logistics teams. It's full-on growth mode.
Makes sense.
Yeah.
Now, shifting gears a bit, the whole U.S. transplant system is kind of in flux, undergoing modernization. How does TransMedics fit into that, especially with some of the recent industry chatter?
Right. They're very engaged in those conversations. Their messaging is clear. They see their NOP model as a win-win-win.
For whom?
For patients, hospitals, OPOs, organ procurement organizations. They use data to show their model actually increases the number of successful heart and liver transplants nationally.
So they're arguing it expands the pie, essentially.
Exactly. They acknowledge it's an emotional topic, and there can be misunderstandings, maybe some friction with OPOs, but they frame it as collaboration, not replacement. They argue their goals align with OPOs. More viable organs, more lives saved.
Okay. There was also some, I think the term used was market confusion after a New York Times piece on DCD, donations, donation after circulatory death. What was their take?
Yeah, they addressed that directly. They were emphatic that the actual declaration of death, whether it's DCD or DBD brain death, is completely separate from their surgeons.
So not their call.
Not their call at all. It's done by an independent physician. They also said they're not seeing any drop in DCD donations. If anything, they think more oversight might be good, pointing to maybe some past haphazard non-OCS practices that led to organs being lost.
So their message is DCD is crucial and needs proper protocols.
Pretty much. It's vital for increasing organ supply, and it's here to stay.
Got it. Well, let's swing back to financials. What do they say about guidance for the full year and margins long term?
Okay, so they raised the full year 2025 revenue guidance, now expecting between $585 million and $605 million.
Which is about 35% year-over-year growth at the midpoint, right?
That's right. Solid growth outlook. They see gross margins staying strong, around 60% for the next few years.
Any BIMs expected.
They did mention some likely moderation in the second half of the year. There's scheduled maintenance on the aircraft fleet, which will mostly hit Q4 results, and maybe some minor seasonality in Q3.
But overall, margin expansion for the year.
Yeah, still expecting at least 650 basis points of operating margin expansion for the full year 25 compared to 24.
And longer term, that 30% target.
Still aiming for operating margin at or approaching 30% by 2028. They admit the path might not be perfectly straight, with ongoing investments, but that's the goal. Speaks volumes about their confidence in scaling this profitably.
And just to clarify, those next-gen OCS trials we talked about, they don't factor into this year's guidance.
Correct. That's a key point they made. Those trials aren't in the 2025 numbers. They see them as drivers for future growth for 2026 and beyond.
So it's about expanding the market, not just shifting current volume.
Exactly. They expect these platforms will let them serve hundreds more patients they can't reach now. Think like 300 lung patients in the trial alone who are new potential users. It's additive, not cannibalizing.
Though they might get some logistics revenue from the trials.
Yeah, they expect some revenue from the cold storage arm of the trials, but the really big financial impact from the next-gen tech itself is further out.
Okay. Did they touch on competition? That space can get, well, noisy.
They did, yeah. The CEO was pretty direct about what he called market confusion and noise from competitors.
How so?
His point was, as TransMedics gains share rapidly, it's natural that competitors with smaller footprints might feel the pinch. But he argued that shouldn't be seen as a negative reflection on TransMedics itself.
Interesting framing. Did he mention any specific competitors?
He specifically addressed OrganOx's device potentially being approved for flight. He basically dismissed it as a major threat, citing things like its size, battery issues, and what he called an inherent back-to-base design.
Implying it's less flexible for real-world air transport.
That was the implication. A strong statement of belief in their own integrated system, the tech, the service, and the logistics.
Okay, so bringing it all together, how did investors react initially?
very positively. The stock jumped significantly after hours when the results came out. Closed up, 10.5% the next day? On higher than usual volume, too.
So strong buy-side conviction confirmed.
Definitely. It wasn't just the beats on revenue and EPS or the raised guidance. It was the whole package.
Including those FDA green lights for the next-gen trials, right?
Yeah.
That adds regulatory momentum.
Absolutely. That's critical validation. Now, sure, we've seen the stock pull back a bit since then, some profit-taking technical consolidation. That's normal.
The underlying story.
The underlying business momentum seems really solid. You've got this clear long-term growth path in a market with huge unmet need. Management seems proactive on the industry changes and competition, and they're clearly investing for the future. It's a compelling narrative.
Right. Okay, that brings us to our favorite segment. This is not financial advice. Time for a thought experiment. An outrageous but plausible trade idea.
All right. Given everything we've discussed, the long-term vision, the clinical catalysts, the execution, a long-term conviction play seems fitting, doesn't it?
It does. So here's the pitch for the hypothetical investment committee. We're looking at a long-term bull call spread on TransMedics, ticker TMDX. We're talking expiration dates way out, maybe 2028, even 2029.
Okay, long horizon, what's the structure?
Buy a deep in the money call, say a $100 strike, and at the same time sell an out of the money call, maybe up at $250 strike. Yeah. Both expiring far out.
Got it. So define the risk, define the potential reward. What's the thinking?
The rationale is simple. It's a leveraged bet that TransMedics pulls off its ambitious plan. If they hit that 10,000 U.S. NOP transplants by 2028.
Which would be huge scale.
Exactly. And if they make real progress towards 20,000 with kidneys.
Yeah.
And crucially, if those next-gen heart and lung trials really do prove superior and shift the standard of care.
Then the upside could be substantial.
Right. The deep ITM call gives us leverage on that core growth and market expansion. Selling the higher strike call helps fund it, caps the max profit, but reduces our initial cost.
So it's a bet on the Trident fundamentally reshaping transplantation globally.
Pretty much.
Yeah.
If they capture a big chunk of that 20,000 plus potential U.S. market, expand internationally, get new indications, could the stock push past $200, $250? It's plausible over that multi-year time frame. Defined risk, compelling potential reward.
A classic long-term thesis play.
Exactly. So just to quickly recap our main points on TransMedics Q2.
Stellar quarter. Beat expectations clearly. Raise the full-year guidance.
Their strategy, that OCS NOP model, plus the innovation pipeline and infrastructure build-out, it positions them really well for long-term growth.
And margin expansion, too, despite some, expected bumps in the second half due to maintenance and seasonality.
And the market's initial reaction showed real confidence in that execution, the potential here.
Absolutely. But as always, remember, everything we discussed today, it's just for informational purposes.
Definitely not financial advice. Please do your own research, look at all the company info, and maybe talk to a qualified financial professional before making any investment decisions.
Couldn't agree more.
Thanks for tuning in to The Deep Dive. We always appreciate you joining us. Let us know what you think. What stands out to you about TransMedics' path forward and their vision for transplantation's future?